Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is April 1st, and today's episode is going to cover a discussion about fees for bridging for our ETH. We're going to talk about the staking queue. We're going to be talking about some interesting news out of NodeSet, and we're also going to be talking about April Fools and a whole lot more. So let's get started.
10, 9, ignition sequence start, 6.
Okay, so the place to start here is with this post from Spartan, and he says he'd like to elaborate on the bridge fee structure for our ETH transfers between Ronin and ETH mainnet. He says we understand that the current $5 flat fee can be burdensome for some users, transferring small amounts, and we acknowledge this concern. To address this, Ronin chain will be offering high yield opportunities on the Ronin chain to offset the bridging fees. And he says our initial proposal to Chainlink CCIP was a tiered fee model based on transaction value with the following structure: 20 bips for $0 to $1,000, 10 bips for 1,000 to 10,000, 5 bips for 10,000 to 100,000, and 2 bips above $100,000. So this is, although Chainlink cannot currently implement this model, they've expressed willingness to build it out in the future. In the interim, we're adopting a flat fee model. However, Chainlink has suggested an alternative flat fee structure that could incentivize our ETH to remain on Ronin, thereby creating sticky TVL. And that's $1 to go from Ethereum to Ronin, and then $5 to go back from Ronin to Ethereum. It says this revised flat fee model would encourage users to keep that RETH on Ronin. Once Chainlink develops the capability to implement the proposed BIPs model, we can revisit and vote on switching to the more dynamic fee structure. It said by adopting this approach, we ensure the more equitable and attractive fee model for our users, while also promoting the growth and retention of TVL on Ronin. Moreover, the revenue generated from this fee model will contribute significantly to the DAO's treasury, providing a sustainable source of funding for our ongoing development, community engagement, and ecosystem growth initiatives. I believe the solution strikes a balance between addressing user concerns, supporting the long-term health of our ecosystem, and securing the financial future of our DAO. And then here, Patches was the first one who says, I'm still of the opinion that any fee above the default, regardless of its structure, is against the ethos of Rocket Pool. And that was, there was one person who liked that. That person who liked that is, sorry, my computer's being really slow. Yeah, I don't know where that's gone. Valdorf replied by saying, for what it's worth, I'm fairly ambivalent. He says, I don't believe it significantly makes TVL sticky. If I did, I'd be against it because that means we're pushing folks to hold when they don't want to, which I do see is against that ethos. He said, I think it's a tiny bit of user friction, but nothing to write home about. The income is pretty modest. And then I'm giving a bit of a spoiler here, but there's a discussion that comes up. He says it might be worth about 4 ETH a year for a chain like Arbitrum, and we may well be less if the fee means things are moved around in big chunks, and therefore Ronin is less active than Arbitrum. So the biggest argument in favor would be to show some willingness to experiment and to probe how users feel about something like this. And then Dr. Dufa says, he said, I would not be against the smaller fee that was a percentage or something like that of each transaction, but I don't want to punish smaller transactions. It sounds like this is not available feature yet anyway, so it doesn't matter for now. He says, I'm also not necessarily against the small flat fee, and I don't mind the fee being larger in one direction to incentivize keeping our ETH on Ronin if it does that even. It says this is partly because this is Ronin. It might be less for this on, for example, Arbitrum, but I don't mind experimenting with Ronin, Avalanche, etc. He says, even if this does not bring in a lot of money, I think it's not bad to at least try this out. Maybe ETH Ronin $1, Ronin to ETH $2 or so. So that was some of the discussion on the forum. However, this discussion actually took place on trading quite a lot, and there was a whole lot of back and forth. So Spartan put the information in trading saying, some community members have concerns about the fee and want to elaborate this, and so put it in the forum. He's happy to provide feedback and discussion. And the main discussion that came up was with Patches, and Patches here saying that my concerns feel unaddressed. And then he went on to say that, he feels like the Rocket Pool ethos is being broken. He says the no rent-seeking piece has been core component since the dawn of the protocol. Anything that artificially charges our ETH holder outside of the 14% commission also feels underhanded. And then Lou said we actually don't charge 14% anymore. We charge less than that because of the 10% validators that we have. So overall, it's less. And then Noshua says Rocket Pool always had a commission that justified requiring the protocol token, which the protocol used to fund itself via ICO and inflation. I think this was always an underhanded way to see rent seek, kind of replying to Patches. Patches says that makes no sense. But yeah, anyway, this discussion went on for quite a while, and it was more about like, how we can generate money for the DAO and what we can do about that, and how, we could make it all work. And the idea is basically trying to create a whole ecosystem out there on Ronin and make that as attractive as possible. And I already gave you a little bit of a spoiler from Val's forum post, but Val basically worked it out that, if Ronin was able to attract the amount of RETH that we have on Arbitrum, then it works out to be a really small amount of money, about 4 ETH a year, which does sound like a really small amount of money. And at that point, is it even worth it to implement these tools and do the work to implement it? So, yeah, you can read this discussion in Trading. It went on for quite a while, and it's actually like not that. Yeah, I think my perspective is kind of like somewhere along the lines with Val and Dr. Doofus. It's like I'm willing to try this. I'm willing to see if it works. The interesting thing is like if we did this 100 times over or many times over, then it might actually end up being like worthwhile. But it sets the ground rolling that the DAO is somehow like open to this, receptive to this, and willing to kind of make this work. But the amount of money that comes in from just one chain might not actually be that much. So there's definitely the future downstream impacts of this, I think, is kind of the thing that people have to focus on, instead of the fact that this is going to be in itself is going to be a revenue generator for us. But like I said, this discussion went on for a really long time, for a few hours there, and people were like trying to work it all out on what it was looking like. So Val here says, I did the math, assuming Arbitrum levels, which is probably generous. He says it would be about $2,000 of income if we use the flat method of $5 for bridging, and it would be about 4 ETH of income using the tiered method, which is not much money. So yeah, follow that discussion. I think there's some interesting points. If you have any ideas, share them with Spartan in the forum, and I think he'll be happy to read those. Okay, we have a couple of new bots in the so we actually have a few new bot outputs on Rocket Watch and things that have changed a little bit. But first, I'm going to talk to you about this staking queue. And the staking queue right now is looking like it is below 300 validators. It's at 299 validators. So we need 9,254 ETH to dequeue all of this. And that means that, the deposit pool has space for 27,254 ETH. And here you can actually have a look at the queue and see what it looks like. So there's this one user here who has a whole lot of validators lined up. In fact, most of the queue is this person. So you can actually like check who's in the queue, where they are in the queue. It's actually a really nice little tool. And what's actually really awesome is that the length of the queue has actually gotten much shorter. So let's actually go and have a look at that right now. You can see that the length, in terms of time, so the length of the queue in terms of the number of validators is about 300, where it has been for a few days, like just under 300 today. But the time waiting has actually reduced quite a lot, which is really, really cool to see. So we went up to around 32 days, and then we went all the way down to 0, and then we went up to around 45 days, and then down to 17, and then we went up at peak to around 47 days, and now down to 14 days. So this means that the person who joined the queue 14 days ago is now at the front of the line. This doesn't mean that if you join the queue today, you will be staking in 14 days time. That's because we don't know what the dynamics of the deposits will look like. And it's only with deposits that we will see the queue moving. Now, that is, just the reality of it. So even though we can say that, the person at the front of the queue right now has only been waiting for, 2 weeks, that doesn't mean that you'll be waiting for 2 weeks if you start your validator. However, gas is so cheap on Ethereum right now, under one go, that if you are, wanting to become a node operator, or if you want to add more validators, I think now's the time to do it. You can just, do it. There's some new outputs here for the live one as well. So live protocol status. So here it tells us about withdrawals now. So it says there's no liquidity in the RETH contract and the target is set. And then it says the secondary market RETH is trading at a 0.07% discount. So that discount is small enough that money is still trickling into the deposit pool, which is keeping some of those validators moving, which is really nice to see. And then in the event style as well, we've got a new live Rocket Watch output as well that's pinned at the bottom of the thread, and this is about governance. So protocol DAO, this is what's actually like what's going on right now. So there's an active on-chain proposal, and then there's 4 RPIPs. That's RPIP 69, 67, 50, and 45 that are in the draft status right now. So you can check those out. And then on the forum, there's some topics that have recent activity, such as Rocket Pool Bridge campaign that we just talked about, protocol funding in Saturn and beyond, the latest GMC round, and on-chain voting, recurring spend as well. So some of those topics have gotten some good activity. So yeah, these are some nice little Rocket Watch outputs from Hululo there. Okay, next we are going to talk about NodeSet. And there was this post in the NodeSet Discord where people were kind of complaining about Gravitar and about what's going on there. And people kind of worried a little bit about Constellation, because Gravitar are the ones who run Constellation, and whether that's going to impact anything at all. And Wander and Nick both came through and said that there's no issues. So he says, we hold all the pre-signed exit messages in an audited encrypted database. Constellation can't be rugged by design. And then Nick says no one is at risk. And then he says, going forward though, he says we have meetings related to unlocking borrowing on Linear today, and we'll update the community after those conclude. He says once borrowing begins, there'll be an influx of ETH liquidity. So basically the idea is that XR ETH and ETH liquidity position will be set up on Nile. And this is a protocol in Linear. He says this is done, but we're waiting for large liquidity provider to come in and seed that pool. And then he says ETH borrowing is unlocked for XR ETH on Zero Lend. He says for those interested in looping, they can borrow ETH, then mint XR ETH. For those interested in exiting, can burn their XR ETH once their fresh ETH hits the system. So if you have XR ETH and if you want to swap it back to ETH, now you'll be able to do it on this pool on Linear. And that's really cool. So this isn't going to lead to more validators necessarily. So I asked, will more validators come online? And Nick says we aren't putting validators in the queue, which is still over 300. And I said basically, like, if you do the looping though, and if it creates a lot of demand for XR ETH, like, you deposit your XR ETH, you borrow ETH against it, then you go and mint more XR ETH, and you do that over and over again. If that happens with enough people, then the XR ETH demand will go up. So then maybe they might spin those validators up. And he says, if you assume there's a consistent influx, and he says if too much XR ETH is minted, then they'll depress the yield until looping is unprofitable. So then it would make sense to spin those validators up. But yeah, and then that was a discussion that kind of went back and forth. So this was actually really nice that they gave some feedback on what's going on. And there was some talk about the queue dynamics, and Nick was saying that he'd rather new validators come online if the queue numbers are less. And I said I don't think the queue for Rocket Pool is ever going to go away, pretty much ever, unless significant changes are made. I said that right now there seems to be an appetite for being up to like 300 to 500 validators in the queue. And people are okay with that. Like, to wait that out, there seems to be a steady stream of people willing to set up validators at that amount. With Saturn 1, as people migrate to mega pools, that will bring the capacity to over 1 million RETH worth, which means that there's going to be a queue for a long time. And then with Saturn 2, it's going to be many millions of RETH worth. So yeah, if you're in Rocket Pool, like unless something changes fundamentally, then expect the queue to be an ever-present feature of being a new node operator on Rocket Pool or starting up new validators on Rocket Pool. Anyway, Nick here then says we're working on exciting things, and he says that he's really excited about all of those. So that's really awesome to see that they're making good progress. And yeah, there was some information then as well about the about the from Gravitar about what's going on. So this was from them. It says, I just want to give you a few updates to you all. First, let me start by saying I'm sorry the communication has been slow. Frustration related to that is understandable and we need to do better. So they said with XRETH, they spoke to Linear and Zero Lend today regarding XRETH. Starting now, we focus on growing liquidity and getting lending market integration on Linear. There is Nile CL pool for XRETH ETH. Linear will be working with us to get incentives on that pool. As we build liquidity depth there, we're looking to follow up with an XRETH collateralized ETH borrow market on Zero Lend. So then there's a link to the Nile pool that you can go check out. It says for XRPL, the immediate need is to deepen liquidity against the RPL and improve the peg. For liquidity, we're urgently starting liquidity incentives for RPL balancer pool. For PEG, we're using RPL protocol revenues to buy XRPL from that balancer pool. For GRI, and then there's some GRI stuff. About token for Gravitar, it says we're hoping to launch the token long. We were hoping to launch the token long before now, but redemptions and TVL shrink has put in place where we felt like the token launch wouldn't do much good for the community if the project's in the project's current state. So for that piece, we're pausing until we find a better path forward and with better product market fit and path to growth. There are a few pokers in the fire and we'll update the community if and when a token generation event makes sense. So this is what's next. We're exploring additional products to bring benefits to you all and also bring more utility to XRETH and XRPL, but we don't currently have anything to announce. So that was, I guess, Gravitar realizing that people were kind of upset with not hearing from them. So they're now providing an update on all these things that they're doing. Okay, moving on to some Ethereum news now, and some of the big news today was this tweet from Benji saying that the Superchain interoperability is near, and it's going to be across all OP chains. So if you are on an OP chain, you will be seamlessly interoperable across all the different OP Superchain chains there. So there's more than 30 of them. That includes things like Unichain, Sonium, Mode, OP Mainnet, Ink, Base, all the ones that you use, they will all be natively interoperable with each other, and that you can like use an app on one that will get liquidity from two and do all of that, and it'll happen within 2 seconds, which is absolutely amazing to see. So this is a really, really nice update. I'm really hoping that it comes soon because we really need this. And I think for a while that the understanding has been that, right now liquidity is fragmented. And then the next step is to have each of these like super chain / elastic chain / Arbitrum orbit chains, whatever, kind of become interoperable with each other. And then once we have based and native rollups, then we can have them interoperable with the Ethereum layer 1 and with each other as well. So I think there's some really, really exciting developments here. And yeah, this is looking really good. So thanks Benji for that. Now, today was also April 1st, as you know, and that means it's April Fool's. So we had a few joke posts. I think the quality of them this year weren't that good. So we'll start with Dr. Doofus in the Rocket Pool community. He says, hey everyone, I thought it would be a good time to announce that I'm taking a position with a company that is going to fork Rocket Pool to run an LST platform on Solana. I know Solana is the butt of a lot of jokes around here, but I feel like it's the next major growth area in crypto, and to ignore it is to ignore the future of the ecosystem. Rocket Pool is a great protocol and it's time to try it elsewhere. I hope people understand my decision and will explain more as we go full force into our building phase. To see more about our company and thought process, consider joining forces. And it's called doofies.xyz. And then Val asks, will this be a friendly fork, or will you be providing revenue back to Rocket Pool? And he says, no, the opposite. We'll be taking a fee from Rocket Pool. And Val says, I 100% support this. So yeah, that's kind of funny. And then on Twitter, there were a whole lot of post as well. This one seemed to get a lot of traction, showing that Satoshi's wallet moved for the first time since 2009. That got 9,000 likes and 500,000 views. This one about the EVMs being crowned the best crypto community. That's a nice one because I'm an EVM, of course. Alchemex said they're launching on Pulse Chain. Pulse Chain is a bit of a joke. And here, Nansen saying that they are going to expand their product to Cardano. And some of the AI comments on this one are actually really funny, talking about how this is a step up for Cardano and how it's going to broaden the ecosystem there, which is absolute joke. So yeah, anyway, on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely day ahead, and I'll see you all tomorrow. Bye.